Welcome back, my friend. I sure hope that you have watched the investment thesis video, which explains why we are investing in Asia, because this is a series of why we are doing things in certain manner, how are we doing things, and what are we investing in, right? So now that you've understood as to why we are doing things in certain manner, in this presentation, we will be going through the logic behind how your investment portfolio will be managed. Once again, here are the standard disclosure. I will not bore you with the details. Now, life is all about solving problems, right? And when it comes to investing, the problems or the questions that you have to solve is basically, what should you invest in? How much should you invest? When should you invest? And when should you divest, right? So let's walk through this, let's walk through them one by one. Now, when it comes to what should you invest in, as well as how much should you invest, I think the answer to this question largely depends on how much returns do you need to have, right? How long do you have to invest? What are your investment goals and what are your current financial situation? All of these questions can only be addressed if you have a good understanding of your own financial plans, basically what your goals are and how far are you away from your goals, right? Having said that, if you are very close to achieving your goals and you have a very short investment duration, you should invest in things that are more conservative or balanced in terms of a risk-return exposure. Now, if you are very close to your goals and you have a mid to long-term investment duration, just be conservative, right? Why bother on taking on an unnecessary risk? If you're far from your goal and you have a very short investment duration, then you have to be aggressive with your investments because you need that higher returns to accelerate your growth progress. If you're far from your goal and you have a mid to long-term investment duration, you can either be aggressive or balanced depending on your financial situation. Now, all of these are, of course, just guidelines, right? At the end of the day, you need to align your investment plans with your financial plans and not just follow these guidelines blindly, right? Blindly investing into the S&P or STI or even your robo-advisors is not the right way to approach your investment planning. What you should invest in and how much you should invest should be tailored to your needs and your situation. It shouldn't be a one-size-fits-all kind of answers. With regards to the third question as to when you should invest or divest, there are only two considerations that needs to be made to help you decide whether or not you should take on higher risk by investing more or lower your risk by selling off part of your investments. So let's run through each of these considerations one by one. Now, for the first point, is it still safe to be invested in the markets? By doing the necessary due diligence and going through the fundamental as well as the technical analysis, as investors, we should have a good gauge as to whether or not the market is currently safe to invest in, right? If, let's say, based on our analysis, the results has shown that the market is currently overvalued and hence poses a higher risk as we are paying a higher price for something that is worth the same or even lesser, it may be wise for us to take an active step to reduce the overall risk of our investment portfolio. Naturally, that means that we have to sell a portion of our investment portfolio so that in the event where market prices decreases back to its fair valuation levels, we are not as affected as we would be before we reduce our portfolio risk. Okay? If the results shows that everything is going on as per intended or as per expectations, then there's really no need for us to do anything to the portfolio. Okay? If the result shows that the current market is undervalued and hence poses a lower risk as we are paying a lower price for something that's worth the same or even more, it may be wise for us to take an active step to increase our investment position so that we can take advantage of this opportunity to buy in at a bargain price level. Okay, now with regards to the technical part as to how I determine if the market is fair, over or undervalued, that will be covered in the next video where we go into the technicals behind the portfolio management. On to the second point, do you need to remain invested? With regards to this question, I think it really depends on your financial progress, right? Basically, how close are you towards achieving your desired financial goals? If you have already achieved or if you're very close to achieving your financial goals, it may be good if you sell off part of your portfolio to reduce the overall risk exposure of your investment portfolio as you may not be required to bear on the type of risk that you're currently taking on. Okay? If you're currently on track towards achieving your financial goals and you need to continue to be exposed to the current risk and reward level, you should do nothing, right? If for some reason you have detracted from the intended progress and may end up delaying your initial plans, you may want to consider investing more so as to increase your expected returns and fill up the void so that you can go back on track with regards to achieving your financial plans on time and in full, right? Once again, I'm oversimplifying the logic behind whether you need to remain invested, buy, sell, or do nothing. Okay, obviously the decision can only be made if you are able to measure your own progress with regards to your financial goals, and that requires a different set of quantitative skills towards planning and coordinating. Now that's our job as financial planners, to help you make sense of what's going on and to help you measure your performances. Now, at the end of the day, as your financial planner and portfolio manager, what we are trying to do is to step into your shoes and guide you to your answers to the 3 questions when it comes to investing. Now, these are the logical process that all investors should take when it comes to planning, implementing, and managing their own investments. Of course, not everyone have the luxury of time nor the interest to do it, which is why financial planners and portfolio managers exist. Now that covers the logic behind how your investments will be managed if you engage me to be your financial planner. In fact, I think that's the logic that all investors should have, right? Not just the logic that I have when it comes to managing your investments. Thanks for sticking around the entire presentation. If you haven't subscribed, please do so and connect with me on LinkedIn to stay updated with future content. Stay safe and I hope to hear from you all soon.